All right, so we'll be looking at a kind of series of things today. So this is just a brief, you know, run through to what we had last week. So we're looking at trading section, which is categorized under the market hours. So what I said the other day was that you just need to know that the currency market or the financial market have an active section and it have a time where the market is not active. So when I mean the market is active and the market is not active, I don't mean that the market is like closed totally. But what you're going to notice is that you are not going to experience the market performing in the normal way. So I used a practical example to use this to let you understand that the way your normal market is, this is 9 p.m. right now. Those people selling electronics, the electronics is still in at the stores. Whatever it's supposed to be around those places, they are there. The marketplace is still known as a marketplace. But what you need to know is that at this point in time, nothing is happening. If you want to buy a television by this time, you either need to wait till tomorrow morning when it is what? The proper time where you could have business transactions. So this is how the Forex market works. Then now, based on the country, and the locations, we're not able to see that. And again, we are dealing with one country currency to the other. For example, now, our country currency, if you will remind yourself, is is Naira, excuse me. The currency for Nigeria is what? Naira. The currency for a place like the UK or London, what they use is pound, British pound. That is what they use as a means of exchange. In the US, they use what is called dollar. So now, I did mention that this Forex market, the difference between the offline Forex market and the online Forex market that makes it a digital environment for you to trade. Meanwhile, you are not trading salt, you're not trading Maggi, you're not selling furniture online to make money. But what we are trading online is a digital assets. And what kind of assets are we trading? We are trading between one country currency to the other one. We could be trading Nigeria currency, versus Ghana currency. Now, when as a foreign exchange trader, this gives you the privilege to know which currency is higher than the other one. And then you now decide to pick the one you want to work with. Oh no, I have, what's that? Don't worry, we'll have to generate another link, but no problem. That's the problem I have with Zoom. Okay, so let's continue. Someone is chatting me up. What's the problem? I'm having lectures and you people are greeting yourself. Why not greet yourself? The WhatsApp side is the group is there. Why not greet from that side? Because when you send in, I'm like maybe there could be a problem or an interruption. So I'm trying to. All right. So let's get back to business. So I was trying to let you know that this forex market, we are dealing with digital products. Those digital products, you as a person, you're using them to make money, is trading one country currency to the other. Like, for example, we are trading Naira versus Ghana cedis, or we're trading, what is it called? Naira versus rands. Rands is a currency for South Africa. So then now, when you now go into these three currency I've mentioned, cedis, Naira, rands, you get to now know that, if I ask you now, between Naira and cedis, Ghana cedis, or between Naira and rands, which of this currency have the highest value? Some of you get it, some will not get it. Now, based on that value, would make you want to focus more on a country currency. Like now, dollar exchange is high. But trust me, if you have pounds to exchange, you'll be a big boy in Nigeria than dollar. So when we are trading now, we have the privilege to set the trading currency as either pound, British pound, but you have to know that when you are funding the account, the charges they are going to charge you is going to be higher, because right now exchange rate is around 870 in dollar, but British pound, the exchange rate right now is around 1,150 naira. So imagine that I am making profit of $10. You know how much I will be holding now? I'll be holding about 10,000 whatever for just $10. All right, so guys, I think that explanation is enough right now. I might need to generate another link if this current section is off on Zoom. Okay, so let's quickly look at our sections as it's divided. Know that we have what is called based on country currency. Get the keyword based on country currency, based on country location. We have the section this way. We have the Sydney section, we have the Tokyo section, we have the London section, and we have the New York section. Now, New York section opens from 8 a.m. and then 5 p.m. So if we say that the market has a time it is active, and the market has a time the market is not always active, that means we need to know what time does the market run, what time frame does it operate like, and what time is the market going to close, so that information is key. So from 8 a.m. we are going to be what? Experiencing what? A very good flow of activities in the currency market. So when we go further, we'll now know those currency that falls under the country we are mentioning. We'll also spot those other currency. So let me, hurry with my time. Now, how do you know that it is 8 a.m. in New York? You will now do your GMT calculation. You now know 8 a.m. right now. Okay, now this is 4 minutes past 9 and it's 9 p.m. Right now, it is 4 minutes past 4 p.m. in what? In New York currently now. So if now is like p.m., this could be like, yeah, it could be like a.m. or p.m., whichever one, but just know that right now it is 4 minutes past the hour of 4. All right, guys, so that is that. You read that. Let's not spend time. That was the subject for last week. So today we want to look at forex trading, and then the structure of the market. So that is what we want to look at for today. We look at under forex trading, we want to look at the structure of the market. Now, what do we mean by the structure of the market? We want to know the people that are making up this whole market we're talking about. Even yourself, who is involved in the trading, you have your own what category where you come in. Now, I will explain that in a minute. I'm having a lot of things on my screen here, making them a bit difficult. So in this chapter, we will learn about structure of the forex market. The structure of a typical stock market is shown here. So what they're trying to tell you is that you have the buyers, then at the middle, you have what is going on there. You have a centralized exchanges. We don't need to know everything, but this is just what you can read and you're going to understand. So we have what is called buyers, you have what is called sellers. So we have said that forex is simply the buying and the selling of what? Currencies. One country currency to the other. And then typically, you need to know that the same thing that happens in your physical market, you are either buying a product or you're either selling a product. When you go to the market, it's likely the sellers have what they're selling out, and there are people who come to patronize them who are acting as the buyers. So that is what it is. But now we are dealing with, a digital product that has to do with either we will tell you to buy Euro USD and sell GBP JPY when we get to the future terms of our classes. So, but let's look at this now. But the structure of the forex market is rather unique because major volumes of transaction are done over the counter, known as OTC, which the market is independent of any centralized system exchange. So, well, that is just that. You can read up. For now, what we want to know, we're talking about the structure of the market. We want to know the people that participate to make up this forex market. Who are the people that are involved in the buying, in the exchange, all of these? Number one key players in the forex market are the banks. We call it the central banks. The next people are, we have the major commercial banks. We have what is called the investment banks. Then after that, we have who we call the corporations for international business transactions. So all these guys are trading forex. Example of the banks: First Bank, GT Banks. Those guys, in that their bank, they have people who are involved in forex trading. All this money we go put in there. They don't keep them there. They use them and trade. So now we have come to a point where we know that we have banks, not just bank. We also have what is called a major commercial bank. And then we now have investment banks. Those are different people. And these guys we are mentioning, these are guys that are not